This episode is brought to you by SS&C Mineralware. Are you managing mineral assets and feeling overwhelmed? Unsure if you're getting paid what you're owed? SS&C Mineralware is here to simplify the management of your minerals, royalties, and non-operated working interests. Mineralware's out-of-the-box features give you the tools you need to visualize and keep track of all of your assets in one place. Mineralware lets you know in seconds where your interests are, what's active, what acreage is open for lease, and if you're getting paid what you're owed. With Mineralware, you can even automate your revenue and JIB processing and eliminate tedious manual data entry, allowing you to focus on more pressing issues. Thousands of mineral owners rely on Mineralware to keep their mineral management simple, automatic, and all in one place. Take control of your mineral assets today with SS&C Mineralware. To see a demo, you can visit their website at www.mineralware.com. That's mineralware.com.
Are you ready to make the most of your oil and gas mineral rights? Welcome to the Mineral Rights Podcast. Get the knowledge and resources you need to manage your minerals and royalties. Here is your host, Matt Sands.
Hello and welcome to the Mineral Rights Podcast. I'm your host, Matt Sands, and I'm joined by my co-host, Justin Williams, and we're here to help you make the most of your minerals and royalties. In this episode, we're going to do a deep dive on Venezuela's heavy crude oil industry and, what this recent capture of President Maduro and the U.S. takeover of Venezuela's oil industry means for global oil supply and the impact on the U.S., both the companies, these oil companies that have operated in Venezuela in the past and present, as well as, kind of the economic outlook, and then how much oil can Venezuela actually produce in the short term and in the long term? And then, what's the ultimate end game for all of this? And so we'll break that all down and talk about what Energy Secretary Chris Wright recently told oil executives and, general public as far as what the potential is there. But ultimately, we're going to dive into Venezuela's crude oil reserves numbers and why we should be skeptical about that. One of the headline numbers you've maybe heard us talk about and seen in our other articles is that they have over 300 billion barrels of proven oil reserves, which is the largest of any country by a large margin. But I think when we break down some of the numbers that we actually found and some of the analysis, I think it's a lot smaller than that, but still substantial. But we'll talk about that. We'll talk about the benefits and why Venezuela's extra heavy crude oil is both really unique and valuable, but then also very difficult to produce. And then also talk about, some of the history behind this. We've heard of a lot of claims that they've stolen, oil from the U.S. and things like that. And then whether these claims were justifiable or not, we won't really dive into that. We'll give you our take about it as far as what we've read and the analysis that we've seen. But then also just break down what does the realistic outlook for the production growth on Venezuela and how that could impact U.S. from the standpoint of supply and demand and, how we use that oil and what it really means. And then, ultimately, I think break down and hopefully get to the bottom of the strategic implications of this, which I think is really the most important part. And I think you had a really interesting take, Justin, as we were preparing for this episode and before we hit record. Do you want to talk a little bit about that, give a little bit of a sneak preview, and then let's dive into the historical background here?
It's an interesting problem. And I think this is one of those situations where headlines have to be short and it's impossible to really cover everything that's going on with Venezuela in a simple headline or in a news story that anybody wants to read, Matt. There's just so much at play. And there's a lot of people saying that, this is all about the oil, though I'm sure there's some impact on the global stage. Doesn't really look like that. However, in a national security stage, there's a lot of things kind of currently going on with China that makes this a really important and strategic thing that they're doing. And there's other things going on geopolitically as well, which have an impact. But, there's also, we have partnerships with Canada and Mexico where we're also impacting those partnerships with some of this Venezuelan oil. So it'll be interesting to see kind of how that evolves. But Matt, like you mentioned originally, so Venezuela reported in 2023 that it has 303 billion barrels of proven reserves, which is about 17% of the global total and the highest of any country. But interestingly enough, though that number we hear a lot, they've never been audited. by independent authorities. And to put it kind of in context, Saudi Arabia has 267 billion barrels, Iran at 209 billion, and Canada at 163 billion. But a lot of question marks on, is that number realistic, Matt? And I don't know that anybody can say yes to that for sure.
Yeah, I think you're right. So it was interesting because in the pre-Hugo Chavez regime, Venezuela reported around 100 billion barrels as their proven reserves. Suddenly that doubled to 200 billion in 2011. And then amazingly, another 100 billion was added in 2023. I think that's maybe around the time when Maduro took over. And so it's sort of like the fact that that aligns with these regime changes. It's more, in my mind, a political, number. And then at the same time, when you talk about proved reserves, that's actually reserves that you should be able to extract economically in the current technology and infrastructure that's there and all the things. And in the meantime, the oil infrastructure is dilapidated. It's falling apart. Its output's declining. So I think you could easily say that those numbers are fantasy. And there's some quotes in here. There's two different sources that I've seen. There's Francisco Monaldi, who was the director of Latin America Energy Program at Rice University, said that Venezuela typically recovers between 7 and 8% of the extra heavy crude oil in place, not the 20% recovery rate used in the official figures. So, when you factor that in, just the recovery rate alone, that's almost a third. And so that, in my mind, supports the, maybe 100-ish billion barrels in oil reserves. And I think that is what most experts will quote is between 100 to 110 billion barrels, which are close to the pre-Chavez figures, not surprisingly. So, when you talk about oil reserves, that is still a substantial number. It's less than Canada, which is interesting when you think about one of the major sources of heavy crude oil is Canada for the U.S. And it's, pretty obvious that Canada is a much better trade partner than Venezuela historically. They haven't nationalized, the industry and U.S. companies that have gone in to invest. It's been a good partnership. Canada is friendly to U.S. businesses and vice versa. A good trade relationship, maybe arguably until recently under the Trump administration. But 163 billion barrels, in my mind, if this was all about oil, it ought to be, how do we maximize our access to Canadian heavy crude oil and really focus on building like the Keystone XL pipeline and things like that, which is also a focus. But it's, how do you get that oil from Canada to the U.S. more efficiently, more effectively, give us more exclusive access, better access, better trade deals to get access to those heavy crude oil barrels rather than put it on a tanker in Venezuela and send it, over the ocean to the U.S. Certainly a lot more expensive, a lot more risk with that long term, from a strategic perspective. So, in my mind, I don't think this is like you alluded to at the beginning, it's not really about oil. It's nice to have access to that oil. So one of the things that President Trump said is one of the reasons that the U.S. took over control of the Venezuelan crude oil industry is that he said they, quote, took our oil away from us and stole our assets. And obviously that's an oversimplification of what happened. But what actually happened was in 2007, under President Hugo Chavez, Venezuela continued to nationalize the oil industry. And that sort of began in 1976. But that 2007 date is important because that is the date that the Chavez administration drew a line in the sand and told foreign oil companies that they need to enter into new contracts that gives Venezuela's state-owned oil and gas company, PDVSA, majority control of their oil projects. And so it used to be flipped the other way around with these U.S. companies having majority control. It was like overnight, you guys have a new contract, we're taking over and taking majority control. You can still have an interest and give us access to your technology and your people. So two U.S.-based companies, ExxonMobil and ConocoPhillips, said, "See you later. We're out. We don't agree to those terms." And so what ended up happening there is the Venezuelan government seized their oil assets and took them over, basically. So there is some level of taking over some of that and taking it away from U.S. companies. It wasn't from the government. It was from those two companies, ExxonMobil and ConocoPhillips. Chevron, who's the other American company that we've talked about and you've heard in the news that does operate in Venezuela, they did agree to those terms and they continue to produce oil in the country. And really the only major U.S. company that actually has a presence in Venezuela after that nationalization. And there's some different dates in here, but the gist of it is that those two companies, ExxonMobil, ConocoPhillips, they went through international arbitration to get compensated by Venezuela for the expropriation of their oil assets. The World Bank's International Center for Settlement of Investments Disputes ordered Venezuela to pay $1.6 billion to ExxonMobil in 2014 and $8.7 billion to ConocoPhillips in 2019. And not surprisingly, those two companies say, yeah, we haven't gotten paid, nearly anywhere near that number. So I think if you think about the financial implications of the U.S. selling Venezuelan crude and pocketing some of that money, I had a pretty negative response to that. It says, well, that's just stealing from Venezuelan people. But there is an amount of money that they owe. Say round that to like around $10 billion. They probably owe those two companies. So I suppose if by selling Venezuelan crude, they're paying back those companies per the arbitration, from the World Bank that's been decided, and then the rest of the money goes to the Venezuelan people. That, in my mind, seems like a fair settlement. Now, the way they did it, maybe not great, but when we break down the strategic implications here at the end, I think there's a really important takeaway that isn't getting talked about in the news, which I think is really the headline and the real reason for us going to Venezuela. But before we get to that, Justin, do you want to talk about the geography of Venezuelan oil, where it is, how it's produced, how we actually get this stuff, where it's located, what's difficult about it?
Will do, Matt. And to kind of segue from what you were saying as well. So in the 1970s, production from Venezuela was about 3.5 million barrels per day. And that was about 7% of global supply. To today, or to recent, we're talking 900 to 1 million barrels per day, which is less than 1% of the world output. So, this had a major impact on Venezuela. And I'm sure the how well the equipment was ran, upkept, new methods, all those fun things. So into the geography. So the Orinoco Belt, which is the heart of Venezuelan oil, it's a massive east-west swath stretching roughly 370 miles east to west and about 40 miles north to south. And this area holds most of Venezuela's petroleum reserves. It's divided into 4 primary development areas, each operated through joint ventures led by state-owned PDVSA. And then in 2007, PDVSA required foreign partners to secede majority ownership, like you mentioned, Matt, ensuring that the state-owned entity held at least 60% equity stake in all the Orinoco projects. And Matt, prior to that, there were a lot of key joint ventures going on that were really bolstering those production numbers and is how they reached the 3.5 million barrels per day. There's some other facts about the oil as well, one of which the eastern conventional fields produce a less muddy crude, generally medium to light. And that really helps the major refineries and it helps to balance off the really heavy crude, which Venezuela is known for. There's a few other areas as well where they're able to bring in some different blends, but in most of the oil, Matt, in Venezuela, and you could talk more on this, is a really heavy, sulfur-rich, dense crude that requires some kind of diluent or the steam methods to be able to keep it thin enough so that they can move it through the equipment. And Matt, something interesting is the Venezuelan oil history dates back to the 20th century. 1922 is marked as the beginning of the production and major reserve discovery in Venezuela. And then by the late 1920s, Venezuela was a top global producer and a leading exporter until post-World War II, when the Middle East had some discoveries and leadership shifted. So there's a long history in Venezuela, and that hard to work with crude has been something that they do know the methods, but requires a lot of upkeep, maintenance, investment into it, and know-how.
Yeah, that's exactly right. And, this extra heavy crude oil is very difficult to produce. We talk about oil, we talk about API gravity, which is basically the density. And it's sort of backwards. A low API gravity means that it's more dense. So when we talk about, desirable light sweet crude oils, things like that, you have like API gravities of 30, 40, 50, very high numbers there. This Orinoco extra heavy crude oil is 8 to 12 API gravity. So it's basically, when you think about the difference between this stuff and light sweet crude oil, when they do the distillation and goes through a refinery, they get more gasoline, they get more of the light, light end stuff. So think like more gasoline. Now, sour crudes and heavy crudes, they yield more diesel, more asphalt, and more of the other junk that's left behind. There's different uses other than transportation fuels. So that is where we have the need for some of that, because we do have a need for diesel, for asphalt, and things like that. But there's, a mix, right? There's like a certain amount of demand for gasoline, a certain amount of demand for diesel. The way we get there in the refineries is they blend the light sweet crude oil with the heavy crude oil so that it goes through at the right mix. And then they can extract those products, based on the demand for them and what the refinery is designed for. But like Justin mentioned, when they drill these wells, they're long horizontal wells. And what they do is they rely heavily on artificial lift. So what they do is they blend light diluent downhole. So that's think about like a very light natural gasoline or condensate, and they mix it downhole with this heavy asphalt-based oil, and then they can extract them, blend up, and then pull it out, and then re-inject the diluent. And so that's one way to do it. The other way is that they actually heat the ground. So you hear things like Canadian oil sands. They use a huff and puff method where for a period of time, they'll inject steam downhole, heat up the reservoir, break up some of that heavy crude oil, and then they'll produce it for a while. And so this kind of cyclic steam production is what's used. So similar techniques in Venezuela. So part of the issues is, as you can imagine, these types of systems get gummed up very easily, require a lot of maintenance, and there's capital intensity to replacing pumps, replacing equipment as it breaks down, as it wears out because of the sand and the heavy oil that goes through it. And what ends up happening, if you don't reinvest, then you have a decrease in capacity over time as these things break down and you don't fix them. And that's a lot what happened, I think, in Venezuela. Similarly, with the systems to upgrade the crude to export, and to basically allow greater access to different markets that can use an upgraded, sort of taking and breaking down some of that oil at the initial phases before you ship it out. They don't have apparently that capacity anymore. Those all are shut down. And so they can transport it. They have to blend it with that diluent again to allow it to be pumped and transported. And so that does present a constraint. And so at the end of the day, though, let's talk, Justin, like why we need heavy oil like from Venezuela, and then really what the impact is in terms of getting access to this oil or more access to this from a U.S. refining capacity. Do you want to talk about that?
Yeah, Matt. So a lot of people don't realize we do need heavy crude. It is something that our refineries, many of the U.S. Gulf Coast refineries, they're originally designed and built to process Venezuelan heavy crude. Beginning in the 1990s, refiners reconfigured plants with increased coking capacity and upgraded steel to process dense, high sulfur crude from Venezuela, Mexico, Ecuador. And then PDVSA even purchased U.S. refineries, including Citigo's 3 facilities, with a combined capacity of over 800,000 barrels per day. So this infrastructure was built and became the norm in the United States for the heavy crude. The U.S. produces primarily light sweet crude from Shell. It's good for gasoline, but not for much else. And about 70% of the U.S. refining capacity is designed for heavier crude. It creates a real structural need, Matt, to import heavy crude despite being the world's largest oil producer. Most people, I don't think, really think about the differences in crude, but there's a lot of uses of heavy crude, from lubricants, diesel fuel, on and on and on, Matt. And I'm sure you could mention many of those.
Yeah, I think that's very important to recognize. And I think also because, before we got into this shale revolution where the U.S. became the largest producer in the world and have, an excess amount of this light sweet crude oil, we had access and really relied on crude oil from Mexico, from Venezuela, from Canada, which tended to be that heavier crude oil. So when they build a refinery, when they design it, it has to be designed for a certain blend, right? These systems are not that flexible. These different elements in the refinery that do different things to get the end result of having the gasoline, the kerosene, the jet fuel, the diesel, the asphalts, and things like that. And so because, like you mentioned, Justin, that 70% of refining capacity is designed for that heavier crude, we need to keep feeding it that heavier crude and blending the U.S. light sweet crude to get the right blend to make those refineries optimal, from an operation standpoint. And then the other interesting thing is, I think when you find that, okay, right now we're getting most of our crude oil from Canada, a lot of it from Mexico. In fact, I did a project at the Shell Deer Park refinery, which was basically had a contract with Mexico to get Mayan crude. And it was like one of the primary feedstocks was that Mayan crude. And so it's designed around that particular blend of crude. So there's some flexibility that some of these refineries might have to replace things like Canadian crude oil or Mexican crude oil to a certain extent. But I think there's probably certain characteristics when you look at it that like they're designed for, like that Shell Deer Park refinery. It's designed to process that Mayan crude. And, you can do some of that with blending and whatnot, but then there's only so much you can do. You need to, maintain the specifications. But okay, let's talk about on paper, if we were to take the crude oil output from Venezuela, we're not creating new demand by taking this. It's just going to displace Canadian, Mexican, and some of those other grades that we talked about. So ultimately, I don't think, going to make that big of a difference from a refinery perspective. There's a quote in here, and we'll have to link to the article that talks about how Venezuelan volumes of crude oil have been cheaper in the past because it's lower gravity, higher acid content, worse, lots of junk in it that makes it less expensive to purchase. So if they can figure that out, then it could boost refinery margins. So there is an element of some of that Venezuelan crude displacing some of those other sources. And so, again, just depending on economics, if that's the case, those companies are going to do what's most profitable. They're not going to do necessarily what the government or what Trump says unless there's a financial incentive. And so that, I think, talks about the production outlook. And I think that is a good segue to that. Justin, do you want to talk about what Secretary Chris Wright told executives as far as kind of the short-term output potential here in Venezuela?
Yeah, the numbers being tossed around is that Chris Wright mentioned 2 oil company executives that output can rise 30% from the current levels of 900,000 barrels per day in the short to medium term. And that's an increase of 300,000 barrels per day, which would have little impact on the global market of 106 million barrels per day in 2025. President Trump has mentioned that he wants U.S. oil executives to invest $100 billion to fix Venezuela's dilapidated oil industry. But Matt, I think this kind of falls into a bit of a bucket of the drill, baby, drill. It's got to make the financial sense, as you mentioned, and companies are committed to living within cash flow. So it's been kind of an interesting process here, and there's been a lot of storage issues as Venezuela has been going through the geopolitical issues. Lots of oil being stored and new places for storage being looked at, but progress is going to be slow here. Like you said, Matt, the infrastructure is not quick to change. There may be some price break, but I'm sure there's investment involved in taking advantage of that price break. And the CEOs, for example, the CEO of ExxonMobil, Darren Woods, described Venezuela as uninvestable in its current state, saying significant changes would need to occur before it can be an attractive investment opportunity. And as you mentioned kind of earlier in the show, Matt, ConocoPhillips and ExxonMobil both lost billions when they exited Venezuela under Chavez. So I'm sure the money flowing back to these companies is kind of a first step, but it'll be interesting to see if the oil companies do find incentive and they can see that predictable income and that they can stay within cash flow there.
Yeah, I think that's an important point there. And I think when you talk about what's really possible, if they are able to totally change the legal framework around access to Venezuelan oil to make it attractive for U.S. companies to go in there and invest the billions of dollars needed to resuscitate the industry. I think, like you said, Justin, they're not going to do it unless there's a real financial incentive, because ultimately they have other projects that they're weighing against these Venezuelan projects. And, when you look at geopolitical risk and all those things, that factors into the investment decision. And so it's got to be a pretty big positive number, I think, for them to go in and spend a significant amount of money, and things have to change drastically. And one of the things, even PDVSA estimates that $58 billion is needed just to update pipeline infrastructure to return to those peak numbers. So, there's some numbers that have been thrown around, and we'll link to the articles that we found on this that talk about how much is required to invest and how much of a boost in production they're going to get. And sort of the next 2 years, so talk about near term, but they're saying that a realistic target, it sort of aligns with what Chris Wright said of like 1.3 million barrels per day within 2 years of the political transition with a modest investment. They're saying like $10 to $20 billion with existing fields and existing pipelines, just rehabilitating stuff. to add, say, between 300 to 500,000 barrels per day. So that potentially is doable, I think. When you talk about longer term, they say that Rystad Energy estimates that about 110 billion in capital investment is needed to return to the country's late 2000s output of around 2 million barrels per day. And that's in line with what President Trump is asking for, around the $100 billion. But they're not just going to spend that money unless there's a reason to. And right now, I just don't see it. And so I think ultimately, when you talk about legitimate supply concerns, I don't think Venezuela moves the needle from a oil supply standpoint. I think there's something, a geopolitical motivation going on. I've heard, and we talked about this before, that, as the world superpowers, when you really look at it, it's US, China, and then Russia to a lesser extent. They're looking at how do we, secure access to these critical resources to, this our part of the world, to have control over it, for security purposes, for all the things. There is an argument I heard about, well, we want to have access, we want to have control over the Americas. So we want to have the U.S. having dominance over the Americas. And I think Trump has said, and we mentioned in a news episode about one of the doctrine of the current administration is to really maximize our focus on the Americas. And I guess this sort of falls in line with that, certainly getting access to the market for crude oil in Venezuela. But I think really, at the end of the day, if we really dive deeper and behind the surface level stuff that's being talked to in the media, and I haven't really seen this talked about in the media, about the broader implications for this beyond oil, right? So we talked about oil and all the things, but there is a mention here on China, and that's one thing that is sort of kind of glossed over a little bit, that China was the largest, I think, importer of Venezuelan crude oil during the sanctions and stuff like that. So they were able to get it because it was heavily discounted. It was like $5 per barrel, off market through this shadow fleet of tankers. And so they got a screaming deal on crude oil from Venezuela. And in the meantime, they were doing some other things. And you want to talk about the Silk Road Initiative and other things that China is trying to do kind of globally and how that has impacted Venezuela. And I think, why we're looking at this is something that we're talking about now.
I think it has a lot to do with that. China has really been pushing investment into these other countries, and especially countries that, are not as friendly with the United States. And they've been dumping money into the countries, helping them to build initiatives under the Silk Road Initiative. But it's also in an effort to have control geopolitically. And if you could think about on a world stage, Venezuela being so close to the United States, having geopolitical control of that would be a security issue, and something that I can see why the administration is kind of looking at that. So I think there's a lot of that at play where they're thinking on this in the geopolitical stage, and I think it'll have an impact. The article mentions that 81.7% of Venezuelan exports is what China will be losing, and that I'm sure that's a significant impact in some ways. It also mentions that the heavy crude that's yielded from Venezuela is really good for asphalt, and China's infrastructure build-out needs has been something that is a priority for China, and I'm sure that asphalt plays a role into that. So, Matt, it'll be interesting to see what kind of impact that really has, but I think it also has a huge impact on control and changing of the administration of Venezuela to be friendly for the United States and not as friendly to China.
Yeah, I think that's the headline here, is that China has, and largely after the sanctions, the U.S. sanctions on Venezuela, is when they stepped in and said, hey, we'd like to be your trade partners and your friends. And they have, some state visits, and Maduro went to China and vice versa. And China had called its relationship in 2023 during Maduro's state visit and a, quote, all-weather strategic partnership, making Venezuela one of only 7 countries to hold China's highest tier of bilateral partnership. And when you look at the numbers, it's not like it's that meaningful to China, I don't think, when you look at the, compared to trade against other countries, but they are looking to expand, right? So exports to Venezuela from China nearly tripled over the past 5 years. And so, that strategic partnership, they're kind of getting a stronger foothold over time into Venezuela, into South America. And one of the things that is mentioned here, we'll link to this government website, actually, it's the U.S.-China Economic and Security Review Commission, so uscc.gov. So one of the bullet points on this page here is that China's foreign direct investment in Venezuela hit a high of $3.5 billion in 2018. And then also Chinese companies have been involved in multiple critical infrastructure sectors, including agriculture, power generation and transmission, ports, and water. And, kind of a dystopian future that we've heard about, like in China, where they have a social credit score and all those types of things. One of the Chinese companies developed Venezuela's fatherland card system, which is used to track voting patterns, ration food and supplies, and monitor social media accounts. And so they have sort of a proxy for what's going on in China. They're starting to set that up in Venezuela. And then they also provided Venezuela with at least $60 billion in oil-backed loans via state-run banks. So as the Venezuelan government is getting further indebted to China, they're needing, they're on the hook to sell the oil to them to help service the debt, basically. And it is one of those things that they're starting to use that to get a foothold, as well as the critical infrastructure. And then one of the most interesting things mentioned here is Venezuela has been the largest buyer of Chinese weapons in Latin America. And so they're buying a bunch of military hardware. And then China has constructed 2 satellite ground stations in Venezuela. And then they mentioned that it's to handle the telemetry, tracking, and command of Venezuelan civilian satellites, which, that's the headline there. But really, at the end of the day, according to at least one Chinese technician on this website, what the government is claiming, Beijing is able to remotely access these facilities. So basically gives the People's Liberation Army access to those facilities to, give them some resilience in a conflict, a space conflict against a major war or something like that. They have access to remote ground facilities. And with the U.S. being one of the main adversaries, it give them sort of a backdoor view of what the U.S. is doing from a military standpoint. So I think ultimately, it's not talked about in the media right now, but I think ultimately that's probably what this is about, is that Venezuela was getting too close to China. We needed to exert our control over the region, at least according to the way that Trump views the world. But, in my mind, I don't really think this is about oil. I think that's the takeaway. I think if you're going to take anything away from here, we'll get more Venezuelan crude, and probably ExxonMobil and ConocoPhillips will be made whole. And it hopefully will be a benefit to the Venezuelan people from an economic standpoint if they're able to revive the oil sector in Venezuela, hand the keys back over to them, not continue to, take the oil, but to let the Venezuelan people benefit from that. And hopefully with a regime there that doesn't steal the money and do things, to enrich the leadership of the country, but to give back and to boost the infrastructure and the overall economy there. That could be hopefully a good story if we're looking at this in the rearview mirror 10 years from now. I hope that's the case. I'm skeptical because, past regime changes haven't usually ended up well when the U.S. hasn't gotten involved. So we'll have to see. Only time will tell. But I think ultimately that's the strategic reason for this, things that have happened in January 2026 as far as taking over the Venezuelan oil industry. And Justin, what are your last kind of parting thoughts?
I think there's multifacets to this. It's hard to capture how detailed and complex this really is on different aspects in one news story, or even without spending hours of doing research. And I think there probably is some concern long term. Matt, there's been some talk about 2030 that there might be supply constraints with the current production numbers. So maybe that's a factor. I'm sure the geopolitical stage is a huge factor. There was also the trade conflict and the trade negotiation, the USMCA negotiations. And, this with Venezuela allows us to put more pressure on some of the other partners. Canada, for instance, we're getting a lot of heavy crude there. Well, America has another access to that now. So I think this is a long-term move, Matt. I'm sure it's very geopolitical. I'm sure they want to get paid or get the oil companies paid back. And they want to make a better life for the Venezuelan people. So let's hope that this time, like you said, Matt, the history's not been great there. Let's hope that we can do that and also secure our place geopolitically long-term.
Yeah, and I think the other important thing is to restore trust in the U.S. government. I think right now it's kind of a very volatile time period with all the things that have been going on. So I think we need the dust to settle. We need things to really get put on paper as far as the trade agreements and laws that would give access to companies that would attract them to come in and invest in Venezuela's oil industry to help revitalize it. So we'll see what happens. We'll remain optimistic that it's a benefit for both the U.S. and Venezuelan people over the long term, and is strategically the right move, which we'll have to wait and see, I think, and see what happens. But hopefully this gives you some more food for thought as you hear about the Venezuela oil industry and, what it's going to mean, from a mineral and royalty owner perspective. Don't expect that this is going to displace your oil royalties. I think companies are still focused on investing here in the United States and drilling wells, and that's, the most economic and most beneficial, especially for the short term. These projects that are well known and that are low geopolitical risk, they'd rather invest money here in the U.S. than going to Venezuela, where there's a significant amount of uncertainty, and uncertainty is what blocks investments. At the end of the day, we need to get more certainty around how companies can get in there and do that before there's any meaningful change. So with that, we'll link to all the articles we found on this in the show notes, and definitely be a good read. There's some really interesting articles that talk about the history and the facts here. So definitely read those, and you can find those as always at mineralrightspodcast.com. Thanks again for listening. Thanks, Justin.
Thanks, Matt.
Thanks so much for listening to the Mineral Rights Podcast with your host, Matt Sands. Don't forget to subscribe and share at mineralrightspodcast.com. The Mineral Rights Podcast should not be construed as investment, legal, or tax advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy.